Hello guys, what's going on? Jay here from Target E-commerce Accounting. So what this video is all about? Today, we will be talking about cost of goods sold for e-commerce. What are the necessary data you need to get it and how it is calculated? Did you happen to make good sales but in the end you feel like you are losing more and more money? How did that happen? There could be a lot of factors into play, but one of the biggest factors is your cost of goods sold. So in this video, we will be discussing about what is cost of goods sold, what do you need to get proper cost of goods sold, what is the most accurate way of calculating cost of goods sold, and what are the negative impacts of having inaccurate cost of goods sold, and how correct cost of goods sold can help you make the best decision for your e-commerce business. But before that, please subscribe and click the notification bell to get notified whenever we upload new videos. Okay, so now we will be discussing cost of goods sold in more detail. What is cost of goods sold? Cost of goods sold is the value or the amount of goods sold in a particular period. So it means that when you are selling online as an e-commerce seller, for example Amazon, and you sell your products, so the product that you sell or the product that has been sold has a value or a cost. Cost of making it, cost of buying it, and cost of making it available for sale to the customers. So that's the cost of goods sold. Whenever there's a sale, there will be cost of goods sold. Okay, so the next one that we will be discussing about is the formula to get cost of goods sold. So in order to get the cost of goods sold, we need to use a formula which says cost of goods sold equals units sold multiplied by unit cost. And that's the basic formula and the most accurate one. Another formula is beginning inventory plus purchases less ending inventory equals cost of goods sold. Now the problem with this formula is when the balances are still not reconciled or not accurate, or the balances of the inventory are not yet updated, you will get inaccurate cost of goods sold. Because this computation relies on the balances of the inventory, so when the inventory is not accurate, the cost of goods sold computed is also not accurate. Another thing is that this formula mixes all inventory adjustments like lost inventory, damaged inventory, disposed inventory, and spoilage and shrinkage or expired products. So we always prefer using units sold multiplied by unit cost, and then the other inventory adjustments will be accounted for separately. Okay, so what do you need to get the proper cost of goods sold? You will need to get the unit cost per SKU first, then the units sold per SKU, and multiply both of them. So now the formula will be revised. Make it clearer. Cost of goods sold equals units sold per SKU multiplied by unit cost per SKU. Okay, so what is the most accurate way of calculating cost of goods sold? The most accurate way should include all costs directly associated with production and getting the product into the selling condition. These costs shall become part of unit cost per SKU. And the list is here. Number 1, product purchase cost. If your business is a buy and sell, then you purchase products from your suppliers. That is the purchase cost. Number 2, production cost. Production cost or manufacturing cost are for manufacturing businesses. If you are creating your own product, or if you have a third-party manufacturer that is creating your product, then the production cost or manufacturing cost is part of the unit cost of your inventory. Third are shipping costs. These are shipping costs that is incurred to bring your product or ship your products from the supplier or from the manufacturer going to your warehouse or going directly to Amazon warehouse. Fourth, duties and taxes. So usually if you're a seller who imports product from other countries, then you will pay duties and taxes upon importing, and that will become part of the product cost, and that will also become part of the unit cost per SKU. Okay, and now we will be talking about the costing methods that we should use in calculating cost of goods sold. So we generally have 3 costing methods, and those are FIFO, first in, first out, LIFO, last in, first out, and average. So what is FIFO? FIFO costing method means first in, the product that comes first, will be the product that will be sold first. So when you compute your cost of goods sold, you will compute the cost of the product that comes first as the first cost of goods sold. For example, if you bought product at a unit cost of $5 and then you bought another batch of product at a unit cost of $6, when a sale happens, you will compute the cost of goods sold based on the first purchase, which is $5 per unit. So that's the first in, first out method. LIFO means last in, first out. So what does it mean? It means the last inventory that you put on your warehouse will be the first to be sold. So it's the opposite of FIFO. So it assumes that when you have purchases of multiple batches, the last one will be sold first. For example, you buy products on batch number 1 at $5 per unit, and then on the second batch, it's $6 per unit. When a sale happens, LIFO will assume that the $6 per unit will be sold first. So you compute cost of goods sold based on the $6 per unit. Okay? So what is average? Average is the total cost of goods purchased or produced in a period divided by the total number of items purchased or total number of items produced. So it means average is just total them all and then divide by total quantity. That's the average. For example, if we have 2 batches of purchases of products, one is for $5 per unit and we have 10 units from that. The second batch is $6 per unit and another 10 units in quantity. And what do we do there is first total the amount. So 10 times 5 is 50, and then the next one is 10 times 6 is 60. So the total amount is 110. So let's show it on a calculator. So the first purchase is 10 times 5, which is 50. And the second one is 10 times 6, 60 plus 50. That's the total amount of the 2 purchases. And then the next one, we need to total the quantity, which is 10 plus 10 is 20. And then the total amount is 110 divided 20, which is the total quantity. We got the average cost of 5.5. So when a sale happened, we will calculate cost of goods sold based on the average cost of 5.5. And that's it. That's the average costing method. So what are the negative impacts of having inaccurate cost of goods sold? So if cost of goods sold is understated or overstated, then it's not accurate. If cost of goods sold is understated, then you will have overstated gross profit or gross margin, overstated net income, and then you will have more tax liability because you have more income in your profit and loss. And then in the balance sheet, inventory will be overstated. If your cost of goods sold is overstated, then you will have understated gross profit or gross margin, and you will have understated net income. It will become like a tax evasion strategy because you will have lesser income and you will have lesser tax liability, which is not correct. So having inaccurate cost of goods sold can result to different tax implications. Okay, and when you look into your balance sheet, you will have inventory that is understated because you overcharge cost of goods sold and then the inventory is understated. Now, how correct cost of goods sold help make better decisions? So one of the biggest costs in every e-commerce business is cost of goods sold. So we need to get it accurately so you can understand your business better. And these are the benefits of having correct cost of goods sold. Number 1, better clarity, which means you will understand better, see clearly the results of operations and the performance of your e-commerce business. Number 2, better understanding of the profitability of the business revenue generation. So what is revenue generation of an e-commerce business? For example, if you're an Amazon seller, your revenue generation activity is selling on Amazon. If you're a Shopify seller, your generation activity is selling on Shopify. So the next benefit is better price versus cost strategies. So if you have correct cost of goods sold computation, you will easily see if your cost of goods sold is higher than it should be, or if your cost of goods sold percentage versus your sales is too high or too low, and you can optimize it and make better strategy so you can have more sales, higher pricing, and an optimal amount of cost of goods sold. Next is decisions based on accurate numbers are always more effective. Of course, if your data or information that you are using is accurate, then you can make better business decisions. That's the absolute truth. Okay, so the last part will be examples and QuickBooks Online entries. So we will create an example in Excel. and then we will calculate cost of goods sold. So for example, you have product A, and then you purchase 5,000 units, and the cost of the 5,000 units is $25,000, and that will be $5 per unit. And so the seller ship the products that you purchased and incurred the shipping cost of 5,000 USD. And so you will have shipping cost per unit 5,000 divided by 5,000 units. So when we calculate the unit cost per SKU or product, example, this product is 1 SKU, we will factor 2 items now: purchase cost, which is 5 per unit, and shipping cost, which is 1 per unit. So the total unit cost now is 6 USD per unit. So this is the unit cost per SKU of the product. If, for example, the company or your company has sold 500 units for the month of June 2024, so your cost of goods sold will be units sold 500 multiply by unit cost 6, and then you will have cost of goods sold of 3,000 USD. Where is that sign here? Okay, so units sold 500, unit cost $6 per unit, so you will have $3,000 cost of goods sold for June 2024. And then the balance of your inventory is the purchase cost is 25 plus the shipping cost of 5,000, and then cost of goods sold is 3,000. Then at the end of May, you will have inventory June 30, 2024 of $27,000. So at the end of June 30, 2024, you will have inventory balance of $27,000. Okay, and how do we do the entries in QuickBooks Online? So now we will go to the sample company file of QuickBooks Online and make the entries to record the cost of goods sold. Okay, so the first entry that we will be doing is the entry for the purchase and shipping cost. Let's go to new and journal entry. You can use purchase order in QuickBooks Online if you have that feature. For now, let's just use the journal entry. For example, the company bought the product on June 1, and we will debit inventory on the amount of 25,000 units of product A, and then credit accounts payable or cash if you paid it via cash or credit card, and then credit card or accounts payable depending if you already paid it or not. So let's assume we paid it via credit card. Let's create the credit card account, copy the description on the memo, and then let's save it. Okay, and let's make another entry for the shipping cost, which let's assume happened on June 5. The shipping cost will be part of the inventory cost also. Just put shipping cost for 5,000 units. And let's assume it is paid via credit card again. Let's save it. Now the last entry will be the cost of goods sold entry. And let's do it at the end of the month, June. For the journal entry number, you can use whatever meaningful journal number that you want to use. So let's leave it at that. And now let's record the cost of goods sold, debit cost of goods sold in the amount of $3,000. And let's make a description: cost of goods sold for 500 units sold for the month of June 2024. And then let's credit inventory. So this is the entry for the cost of goods sold, and we haven't mentioned yet the entry for the sale. The sale entry can be more complicated, especially for Amazon sellers, which has lots of fees and deductions. So let's not include that here in this example. Let's just focus here on the cost of goods sold and inventory entries. Let's save it. And now let's try to look at the profit and loss and see the cost of goods sold amount. So this sample company has data on it already, so it will be mixed with other accounts, but we can find it. Let's go at the profit and loss. And so let's filter it in the month of June 1 to June 30. And now I see that there's a 3,405 amount here. Let's open it. Oh, so where's the one that we made? Let's go back to the journal entry. Go to journal entry history, and we have here the cost of goods sold and inventory asset. Why it's not showing there? I don't know why the modern view is not showing the journal entry, but if we switch here on the classic view, it shows the journal entry here at the bottom, which is 3,000. So if we exclude the other entries here from the invoices that are already inside the sample company, then we will have 3,000 cost of goods sold. Now let's find the inventory balance on the balance sheet. Let's go back to reports and balance sheet. Let's make it ending June 30. And as we can see, we have an inventory asset of this amount, and I think that's also mixed up. So let's open that and let's filter this as June only. Now we have the purchase of 5,000 units in the amount of $25,000. And the shipping cost of $5,000 and the cost of goods sold of $3,000. And now we can see here the purchase of product A for 5,000 units, $25,000 purchase cost. And then we have here the shipping cost for 5,000 units at $5,000. And we can see at the bottom the cost of goods sold, negative $3,000. So if we remove these other entries here from the sample company, then we will have exactly $27,000 at the end of June 30, 2024. If you want to switch to classic view, you can just click here. I find it easier to understand, but maybe that's just a preference, okay? So you can use the modern view if that suits your best. Okay, and that's it for entering cost of goods sold, and also we included inventory entries in QuickBooks Online. And that's it for cost of goods sold for e-commerce businesses. If you want something to be included in the next video series, just let me know. And again, Jay here from Green Target E-commerce Accounting. Hit like and subscribe so you can get notified whenever we upload new videos in our channel.